Finance for development or development finance is basically capital that is directed at productive activities. In contrast to, say, money for food, for fuel, and for day-to-day spending and consumption. And so that concept, whether development finance or finance for development, is really looking at building the infrastructure base. What kinds of money goes into the road network, the school and hospital infrastructure, the farming irrigation systems, the very live wire that keeps the economy running. So that's the concept of it. So I want to make a distinction here because what is discussed typically in academic circles and also in the universities, they talk about another type of development finance, which is finance flowing from the development finance institutions like the World Bank, the IMF, etc., etc. So it's important to get a distinction right. I call it transactional development finance, which is finance that is flowing from, if you talk about even foreign direct investments, where a company comes here and sets up the free zones, those company employs people, repatriates profits, and maybe gives some taxes and some employment. That's one part. There's also capital that flows into the bond markets. That's also another type of development finance. There's commercial paper. There are loans that flows from country to country and from development bank institutions to the country. All of these are aspects of development finance, but I call them transactional.
Hello, and welcome to the Great Return podcast, where we have conversations rooted in wealth creation and African development for and by people of African heritage, both at home and abroad. I am Lordy Emen, your host, and our mission at TGR Africa is to contribute to making people of Black heritage and the African continent prosperous through business and investments. Today, we are discussing, can diaspora capital plug the gap in development finance in Africa? And for that conversation, we are privileged to have with us Professor Alagidede Paul Alagidede, who holds professorships at both the University of Witwatersrand in South Africa and the University of Ghana, Legon, where he serves as the Bank of Ghana Chair in Finance and Economics, amongst other numerous hats he wears, including being a farmer, which is one of my favorites. So welcome, Prof.
Thank you very much.
It's a real privilege to have you here.
My pleasure.
Okay. So before we start the conversation, I'd like you to introduce yourself in a bit more detail for the benefit of our audience in your journey to where you are quickly, and also from all of that, what is important to you at this point?
Thank you, and thanks a lot for inviting me.
You're welcome.
It's a great pleasure to be here, and I'm very glad to see the great work that you are doing.
Thank you.
Keep it up.
We're trying.
These are
We
the
will.
sort of conversations that we need to be having on Africa's development. Getting the message out is really very key. So my background, as you've said already, it's enough. In farming, I'll say a little bit more, because I think when you teach and theorize economics, it's important at a certain point to get yourself, your hands dirty in the mud.
Yeah.
And that's precisely what I have been doing for more than a decade now. I've literally gone back to the occupation of my ancestors, learning how to farm.
I like it.
Grow food just for, if I won't sell, just for the family, and have a self-sustaining food, and grow what I want to eat specifically.
Yep.
And so that has been very exciting, rearing animals and getting to know different creatures and how they behave, and seeing plants grow. from seed to tree to different kinds of, crops that we can make good use of. So that has occupied my attention. And interestingly, it also dovetails very much with the kinds of things I do as an economist.
Okay.
Trying to understand development. We are still largely an agrarian economy. And so understanding the fundamentals of farming and how it feeds to industry, services, and the other sectors is very key. With respect to Africa's development, I've been at the forefront of the continental debates about what else can we do.
Yeah.
We've almost been 70 years as an independent nation in Ghana. And it seems to me that there's still a lot of work that we have to do. And most of it has to come with new knowledge set that can propel us to the next level of our evolution. And so that has been one of my major preoccupations in research, in policy advocacy, and also helping to advise governments across the continent on what are some of the possible avenues other than what we have been taught and exposed to.
Yeah.
So in brief, that's, I should say that I also run a private university network called the Nile Valley Multiversity, which is a kind of institution that is to reconnect us back to our ancient Kemetic roots and to remind us of how great we have been and how great we are now.
Yeah, yeah. So in a nutshell, I think for you, what I see, especially when I've come to where you are at Legon, within the short time, what you've done with the place in terms of what you're growing and everything that you're rearing there, it is quite impressive within this short time. So yeah, I really love that. I really love that. So I'd like us to start the conversation. Obviously, we are talking about development finance. So I'd like us to start with you explaining for the benefit of our viewers to understand what development finance is.
Okay, so finance for development or development finance is basically capital that is directed at productive activities. In contrast to, say, money for food, for fuel, and for day-to-day spending and consumption. And so that concept, whether development finance or finance for development, is really looking at building the infrastructure base. What kinds of money goes into the road network, the school and hospital infrastructure, the farming irrigation systems, the very live wire that keeps the economy running. So that's the concept of the book. So I want to make a distinction here because what is discussed typically in academic circles and also in the universities, they talk about another type of development finance, which is finance flowing from the development finance institutions like the World Bank, the IMF, etc., etc. So it's important to get a distinction right. I call it transactional development finance, which is finance that is flowing from, if you talk about even foreign direct investments, where a company comes here and sets up the free zones, builds a company, employs people, repatriates profits, and maybe gives some taxes and some employment. That's one part. There's also capital that flows into the bond markets. That's also another type of development finance. There's commercial paper. There are loans that flows from country to country and from development bank institutions to the country. All of these are aspects of development finance, but I call them transactional.
Yeah.
Because in the essence, when we look at the development trajectory of African nations, in fact, in the last 60 years, over $2 trillion had flowed in this way, but it hasn't brought about the type of structural transformation that we want.
Yeah.
So that's one part of development finance. It's taught in the schools. It's the most common that people know. But what I call transformational development finance, it's development finance that touches the heartbeat of the economy.
Yeah.
It changes the fundamental wiring of the entire economy. So we're talking about finance that flows in if we have access to road issues or getting food from the growing areas into the consuming areas. This type of finance typically goes to finance that. If we have infrastructure deficits in hospitals and schools, that is the type of finance that goes into that. So for many African economies, I think what we call development finance, we haven't yet touched on the transformational side, which has to do with structural transformation.
Yeah.
Yeah.
So if I understand you right, effectively, finance for development, or the main root of development finance, is what the money actually does in the economy that brings about transformation, that brings about productivity.
Yes.
So other forms, from what you are explaining, I'm thinking other forms of development finance are more or less sources of finance that people use for business, maybe business in a larger scale, which will have some impact, but it's not actually touching the systems that need to be touched for a transformation of the economy to happen.
Precisely. You put it so right. Because we want to see that in a generation, the entire wiring of the economy has gone through serious revamp.
Yeah.
And with the types that we have talked about so far on transactional, we haven't seen that.
No.
Well, they can show you poverty headcounts have, dropped over the last 30 years. Maybe 1 or 2 roads here and there have been constructed. You have had large people leaving the countryside into the urban areas in response to the fact that all development is concentrated in few areas like Accra, Lagos, or Abuja. But in the essence, for the totality of the economy, not much has changed. Yeah.
And in essence too, maybe even that is distracting from the actual development finance, because people are moving from where we need them the most into areas which are already saturated. Yeah. So from what we've said so far, to me, it is like Africa hasn't even touched on development finance because we're not even seeing the outcomes. Yeah. So in that vein, could we talk through some of the indicators of development finance when it's done properly, and delve into what is preventing African nations from practicing development finance?
So there are quite a number of areas that we have to look at here. So if capital will do the work of capital, there must be certain features for us to look at. So take the banking system, for instance. Typically, the banking system exists to ensure that there's intermediation. Money flows from the banks to the productive sectors. A farmer like me who wants capital to buy inputs, hire labor, clear the land, and maybe put an irrigation shouldn't have difficulty in getting that. That is the natural role of the banking system. But if you look at what we have currently, it doesn't actually work that way.
No.
Throughout Africa, if you look at lending rates for the productive sectors, for instance, they are way beyond the reach of those who need capital. So there is excess of capital in one sense, but it's not getting to the areas where capital is needed. And that has caused a lot of, problems. If you take our case in Ghana, over the last few years, in the last 1 year, for instance, lending rates have come down dramatically. I just checked it. Bank of Ghana has done a lot of work to bring these down. And the governor said during my inaugural address that by the end of his tenure, we should have lending rates roughly around single digits, which is feasible.
Right.
But before that, you would see that lending rates are hovering somewhere around the mid-20s to the early 30s. So many people are not able to access finance, largely because of the cost of credit. And this type of finance also makes it lucrative to just put your money in government paper instead of agriculture.
Yeah.
I've always said the Ghanaian or the African farmer is the most sophisticated risk manager that we have seen. To put a seed on the ground, wait for the rain, see it, mature all the way to harvesting. It's one of the most intricate risk management system that we have. But the system can help to, make life a little bit more easier. Because if food production goes up, it also helps with prices in the economy. For most African countries, 60% of the inflation is coming from food.
Yeah.
Which means that if we target development finance and towards the agricultural sector alone, dealing with the roads, clearing the middle woman or man who is extracting as much as 60 to 70% of the farmers' labor. It will reduce the cost of doing business first at the farm gate, and it will also improve the food supply. So that's one big area. We are operating a very dysfunctional system of banking that makes short-term securities like government bonds more lucrative than going into agriculture.
Yeah.
The return on agriculture, as I've observed in the last few years, anywhere between 6 to 8%. The return on government bonds in some countries is in 18 to 25.
Exactly.
So if this is largely riskless in the textbook sense. So any risk-averse person will go for those kinds of funds.
Yeah.
So that's one thing. The other part is that we haven't managed to change the structure of our economy in the last 60 to 70 years. In 1960, Ghana's top 3 exports were cocoa, gold, and timber. In 2025, Ghana's 3 top exports are cocoa, gold, and oil. We've only just dropped. Timber has
gone down.
But if you see what we've done to the forest, from around 8 million hectares, we're now under 2 million hectares. That's how much destruction we've done in terms of harvesting the timbers here, selling it raw. But oil has entered the fray. But largely, the economy is still a raw material base, which means that we harvest our cocoa and sell the raw beans. We even go to the extent of using the raw beans to get syndicated loans to finance. I mean, I don't know how we were taught that type of finance because it just doesn't add up.
No.
And then the gold is the same. We dig it and sell it in other places, and it turns into rings and other ornaments, comes back at 3-5 times the price. So we are not capturing enough value from what we have been given as resources. And that's we can talk about so many other areas where literally we have held ourselves back. I have reduced it to just one thing, that using imported knowledge and logic of economic management is what has arrested our development.
Right.
And if anything can happen, we have to turn inward and start thinking very deeply. So the whole thing I've been talking about is about metanomics, which is looking inside, looking inward, getting to understand what you have been given, harness the resources, and then capitalize on those to trade and to feed yourself.
Right. Yeah. Okay. So looking at it, can we say that African economies are really sovereign, or are we still in a kind of capitalist system, only that is quite hidden, is opaque? We can't really see it as obvious as it used to be. I don't know if you are at liberty to answer straight that kind of question, but...
Well, so I wouldn't say that it's a problem of capitalism or socialism. It's none of those. But the question of sovereignty is very key. Sovereignty is, do you have the ability to make your own economic decisions, for instance, about how you want to spend your money, how you want to create value for your raw materials, how you want to, expand your economy, the direction in which you want to go. To that question, the answer is typically no, because if you've seen what we have gone through in the last 70 years, that has been the experience. Our basic economic policies and theories that we are learning from the schools are actually at variance with our experience as a people. I have mentioned this a couple of times elsewhere, that if you live in a resource-abundant country, an economy, and a continent, for instance, your basic theory shouldn't be starting with scarcity as the fundamental problem.
Right.
You should have abundance as the starting point of your analysis.
Yeah.
And then scarcity is just one minor part of that.
Okay.
But we have been taught over and over the years. Before I graduated, 30 years of my life spent learning about how scarce,
scarce
resources are.
Yeah.
But sitting in my, tropical rainforest, the experience doesn't show that. Yes, there are quite a number of things you have to do to transform the land and to turn it into something. But there are so many areas when the rain just falls, you see cocoyam sprouting here and there, cassava, you just need a stake on the ground. So we are living in an abundant territory, but we have accepted psychologically that this is a poor place. And we have actually been conditioned over and over again that it has become like the basic fact of life. Africa is the richest place. So we should start teaching and talking about wealth.
Yeah. I find that very, very interesting, because I kind of see what you're talking about. The time, when I was growing up, the time I spent in the village, I never really knew about scarcity. It was quite ideal, like in terms of food was, your basic needs were met. And like you're saying, things grow and you are always, full. You're full, like, but you go to school and most of what we learn is about scarcity of resources, which then makes you grow up believing and thinking more in that mindset until you voiced it. I didn't really think of it.
It's very subtle, and we live in it, and it's taken as given that is the natural order. No, it is not. It's an inversion of the natural order. I mean, think about it. So today, for instance, the tomato farmer in Avrongo is trying to cultivate his tomato not to consume, but to exchange it for paper. See, the cocoa farmer is doing the same. Everybody is almost about doing the same. We have shown that this type of approach
is better.
We need to start to think about, first of all, feed the family, feed the community, and then you can talk about trade. But that has been taken over. And since that has also happened, it means that most of what we are trading has become commodities that we can only export. So the focus now is about export commodities. Rather than, so Ghana has
feeding Ghana rather than feeding ourselves.
So if you look at almost all the things that we consume, rice, for instance, we have some of the best land in the world for rice cultivation. Yes, we spend billions of dollars to try to bring rice here. We have the land and the expertise here to grow chicken, but we don't actually satisfy up to 50% of even our poultry needs. So almost about everything that we have to eat and live in this land is brought to us by somebody who is sitting in a temperate land, who hasn't got much land, growing them in laboratories and sending to us. So this kind of inversion is one of the things that if we have to be serious about development, we must begin to change. And I think maybe we are waking up a bit because if you see, we have the Minister of Agric now, who himself is a farmer, a president now, who himself is a farmer, and then a deputy minister who is also a farmer. I hope that these experiences, when they are translated into the political sphere, they should help us at least get food sufficient first. If you can feed your bellies, the rest can, take care of themselves.
It's very interesting that we have abundance and we can grow enough to feed ourselves and then look at the excess to export. Yeah. But because of this scarcity mindset, and again, it's interesting because what we then export, which is like in the raw form, we get next to nothing for it because we've been fed the same scarcity mindset. So we are just like really working hard to send for very little back, and then we're spending loads of money buying back food that we could easily produce ourselves and have a more fuller feeling, more full like abundance feeling than what we have at the minute.
Yeah, food first.
Very
always.
Always.
Yeah.
Yes. So for us to take back our sovereignty still comes back to the agric sector and comes back to using our resources to the best that we can instead of plucking from somebody's system straight into us as a direct translation, which doesn't really is counter to our
experience.
Yes. So reality.
Agric, definitely, but not in the way in which our forefathers did it. Today there's technology that reduces the human labor and the drudgery that goes into farming. And those are some of the things that at the public policy level can be encouraged. Irrigation, back in the days in the 70s, we always go back to this because that was the first time we had massive irrigation infrastructure. I mean, when you look at the entire country from the Tono to Via to Dawenya, all of these massive infrastructure projects in irrigation, small scale dams that help to cultivate the food at the local level, communities were largely self-sufficient. With all the things we can say about the military regimes in the 70s, especially the mid-70s, was that they managed to make us see that you can be a professor and still be a farmer. You can be a politician and be a farmer. You can be a market woman and be a farmer. So small spaces that we had, we can cultivate food and begin to feed the family. And then when that happens, we can then talk about feeding industry, and then the excess we can export. So sovereignty, really, what you eat is very key. Rather than what you earn, that comes secondary. And sovereignty comes in many forms. In your financial system, you must own the financial system. How the money is created at the moment, almost throughout the continent, it's in the hands of others, not us. And I mean, this has gone on for quite a while, and our money system is not decided here. If you look at even the printing of currency across the continent, this is what goes on. So we need to gradually begin to see that the game we are playing is not our game, and we have to get back to our own local game, which we know better. So I now want us to move more to the discussion point for today about the role that diaspora capital can play in African development. So given the challenges that Africa is facing, how do you think diaspora capital can help solve some of its financing challenges? So there are quite a number of us that live outside the continent, and it's the continuum. The countries cannot contain all of us. There are certain expertise that people go out to get. And there are several other reasons why people might want to migrate. So throughout the continent, according to some of the data from the United Nations organizations that do this, they calculate that roughly around 40 to 44 million Africans live outside of their country of birth. And that is a huge number. If you decompose it in Africa, we have roughly about 21 million of those who live in another African country. So Ghanaians living in Senegal, South Africans in Kenya, Ugandans in Lesotho.
That's interesting. That's about half.
In fact, more than half. That live on the continent. And then around 19.5 million live outside of the country.
Right.
And that's staggering. So if you look at that too, you see that majority of these, about 11% goes to Europe, about 5% in Asia. Especially now in the Gulf region, there are quite a number of people going to those areas to look for jobs in the hospitality industry and other places. But we have had a lot of petrochemical engineers that exodus to those places in search of greener pastures.
Yeah.
And then in the US, roughly about 3%. So there's quite a large distribution of Africans across the board.
Yeah.
In Ghana here, it's very similar. We have roughly around 1 million to close to 3 million people, because official statistics shows that about 1.03 million people are outside of the country.
Right.
But unofficially, there are a lot of people who are undocumented, who live within the spaces and the cracks. So
exactly. Yeah.
if we add all of those, we get in roughly about 3 million people.
Right.
But let's stick with the official sources. If you look at the flows that are coming in from this group of people, the 40 to 44 million, it's staggering. In fact, between 2020 and now is the single largest transformative capital that has flown into the continent.
Yeah.
And it's staggering. In 2000 alone, $128 billion flew into the continent from the diaspora. As we speak, the last figures that we checked in 2025, in 2024-25, it's around 685 to 700, billion dollars that is flowing in from the diaspora alone.
Yes.
I mean, if you take all low and middle income countries, this is getting to close to $1 trillion.
Wow.
Of course, South Asia and some of the Caribbeans tend to attract more of this capital than us. But even what we are getting here is significant. So when we narrow it down to Ghana, in 2024, where the figures are available, $6.65 billion flew in. And I just saw that the last year, that is 2025, it's almost close to 7 billion plus.
Yeah.
I mean, this is way beyond what we are attracting as foreign direct investments. It's more than our official development assistance.
Yeah.
And it's staggering in terms of so the largest, most transformative capital. It is very stable. It is Africans that are sending to their, siblings, parents, and colleagues back in the continent that they have left. There is that social bond that comes with this capital. It's unlike foreign direct investment, which has been falling actually since 2000, and even between 2014 and now, in the past 10 years, it has fallen by about 41%. At the same time, remittances,
it's just going up.
Yes, they have gone up in the same period, about 57%. And this is the type of capital that is counter-cyclical, because it doesn't really swing with investors are seeing that there is crisis here, so they're
moving their money.
It doesn't. So it is the most stable, most trusted capital. And it is capital by us, for us, from us, maybe from a distance, but again,
it's still us.
Yes. But when you look at what do they typically use this for? It is the money that goes to take care of hospital bills of grandma, school fees of the, the children, the auntie.
Yes.
Yeah. So about 75% of all remittances are geared towards consumption, basically. And you can say this is survival, but at the same time, it helps to cushion the family in terms of shocks, and it helps the family go on.
Yeah.
And then
sometimes it's the difference between life and death for family members.
Yes.
So it is understandable.
Yeah. So when you look at the whole of Africa, we attracted roughly around 96 to $100 billion in 2024. And 75% of this is going into the consumption. So when you take just the 25% that goes into capital expenditure, that works out to around $24 billion that is entering the continent It's far more than what we are getting from the IMF and the World Bank and all the other so-called development finance institutions. So the most trusted form of capital for us, which we should be very serious about, is the diaspora. Africans living outside of their country of birth.
Okay, so what efforts do you think, or would you say, African governments have made to try and leverage diaspora capital for development purposes? As the figures are telling us, it's huge. Have the African governments made any good strides in leveraging diaspora capital, do you think?
In some countries, yes. There has been deliberate, policies towards that. You would have heard the Grand Ethiopian Renaissance Dam, which is the largest, hydroelectric project. Ethiopia and Egypt now at loggerheads over the Nile waters.
Exactly.
But part of that came from the Ethiopian diaspora. Because there was a vehicle, that Ethiopian diaspora could put their money and in exchange for a return. And most of the money came from, for that dam came from that source. I believe there are other countries that are experimenting several types of products, but at the moment they are very, very minuscule and inconsequential in many ways. So unless we have a deliberate policy to channel this, form of capital towards development activities, in and of itself, it will just flow into the consumption. But I must say that there are others that are coming in through unofficial channels. We don't really track those. So all the figures I've mentioned so far are those that are tracked by the money transfer agencies. The largest of them used to be MoneyGram and Western Union, but over the last decade or two, there are so many of those mobile money platforms to banking and other fintech networks that are facilitating that. The key though is that the cost, we haven't talked about that, because the cost of sending money to Africa is the most prohibitive across the world. The UN Sustainable Development Goals 10C says that we should get this down to about 3%. But for Africa, sub-Saharan Africa generally, costs anywhere around 7.7% to send just $200 across. You compare that to Southeast Asia and Latin America and the Caribbean, which is less than 5 in many cases. So we are paying way more for sending money. So if you look at the 96 or so billion that came in 2024, about 8% of that works out to about $4.8 billion that is extracted in fees alone. And this is financial hemorrhage that Africa is suffering from. So there has to be products for this kind of capital to be channeled into dedicated investment vehicles. Diaspora bonds are the starting point, but we need not end there. We started some of these products like Nabia Capital, where we have tokenized assets. People can sit in the UK, Germany, Austria, anywhere around the world and invest in a poultry farm in Somanya, for instance, in a pig farm in Brofiedu, in maybe a share plantation in Kumutelania, for instance. But there has to be the institutional mechanism, the trust element, and proper management system for diasporans to know that whatever money is flowing in benefits the country, gets the projects up and running. But more importantly, it also gives them
returns.
That is decent.
We'll sort of go into more detail about those things, the problems, and how to solve those problems in our third section. So to finish off this second section, why is it more important for African governments to figure out ways to actually leverage diaspora capital instead of being dependent on institutions like the IMF the World Bank, and foreign investors?
I mean, this question couldn't have been more timely than now. Because if you look at our 17 visits to the IMF,
Right.
it's like dancing
17.
and going round. It's a merry-go-round.
Yeah.
Okay. So we have had 3 debt restructuring cycles. Each of them, they may name it differently, but it's essentially the same merry-go-round dance.
Okay.
The last one was the domestic debt exchange program, which we just came out in 2023. But in the early 2000s, we had 2004, the heavily indebted poor countries initiative that we came out with.
Heavily indebted poor
Yes.
countries initiative.
Yeah.
Poor
Just
Africa.
Think about the
Poor.
psychology of that.
Exactly.
Yeah. And then we had the
Wow.
multilateral debt initiative. The design of the global financial architecture is working exactly as it
You
should.
should, yeah.
I mean, we should stop romanticizing about these things. That is the design.
Yes.
1944, 45, when these institutions were put up, there was no African on the table. So they were not discussing about African, getting developed.
No.
If anything, it has to be a continuation of the colonial project of
course.
extraction. So irrespective of whether the World Bank has a mission to reduce poverty or not, the evidence in front of us is what we are seeing. We haven't seen much structural transformation in the last 70 years. On top of that is that these are not free loans. They come with lots of conditions that strangulate economic policy. In Ghana, we did our study and show that over 1,000 different laws, just think about it as strangulating, things that are hanging around your neck.
Yeah.
It frees unemployment, or what you can do with your, reserves. And all of these things are in our books because we have signed up to that. Whilst they are advising, you to take subsidies off your farmers, they heavily subsidize, agriculture in Europe.
Exactly.
So they can dump any number of... so the system is designed to work exactly as it is working. And we have to think about a new system of development finance that is rooted in our culture, rooted in our experience as resource abundant and rich economy. And that is where the conversation has to be. So thinking about a new way of doing things is that, well, we can still have some of these multilateral loans as a buffer, but they are not the main go-to place. And I think it's been quite reassuring that in the last 1.5 years, we haven't rushed back there.
Yeah.
And we are trying to get off this program. But there's one thing about resetting the economy and getting off the IMF program and leaving the economy just reset. If you reset, you just go back to the default setting. You have been arguing you need to go beyond the default setting.
Beyond the reset, yes.
The default setting is to keep this as a raw material base.
Exactly.
We
don't want that.
Yeah, we don't want that. So the president has sounded quite a lot that, let's process our cocoa here. Why would you actually be exporting the magnesium, the phosphorus, all the minerals and vitamins that are in the cocoa in return for peanuts? So we process here. We have the processing capacity, and
we need the jobs, even
the jobs.
We need the jobs as the minimum.
Yeah, and the government revenues.
Exactly.
So it's a double win if you just turn attention, say, let's process more than half of our cocoa.
Yeah.
Let's not mortgage this for syndicated loans.
No.
I've said this in many ways. The cocoa bean itself was the currency when our ancestors were talking about their economics. So if you want 100 tractors and you don't have the technology to produce it, and somebody had those 100 tractors and needs your cocoa, that is the basis of exchange.
Yeah.
Dollar doesn't enter into that equation.
Yeah.
It's the same with our gold. Everybody needs it to support their currency and other things. It's the flesh of the gods. cocoa is the food of the gods too. So all of this, we have everything that is here for us.
Yeah.
It's just a reawakening. And I think conversations like what you are having with the, return, the great return discussions are really some of the awakening messages that has to come.
Yeah.
With more and more of this getting into the mainstream, people begin to see that we actually sitting on a pot of gold.
We are.
We are sitting on cocoa and oil.
Yeah. We are
That's
sitting,
the money.
Yeah.
Literally speaking.
Literally, yeah.
That's the finance.
Yeah.
Yeah.
Yeah. So that brings us nicely to how how Africa can leverage diaspora capital for development purposes. We've established that there's a huge opportunity to do so, and if we take that opportunity, it will actually have a transformational development in Africa. So, in moving to how Africa can leverage diaspora capital, what are the barriers making it difficult to actually convert diaspora remittances into investment, do you think?
So the first thing is really the avenues for investing this capital. It's one thing to attract the capital, but if it doesn't get to the proper places, that becomes another area of concern.
Yeah.
So typically, agric is very, very risky for most people. Those of us who are even on the ground, we've seen how it is. You can find
challenging.
Yes, it's very challenging on end. So that is very key to begin to unlock the productive sectors, make it a little bit more fluid, to get capital in and to bring up new ventures. The African is naturally entrepreneurial. That is my experience.
Yeah.
Walking around the entire continent and meeting whether they are private equity firms in Kenya or in South Africa, or entrepreneurs trying to eke out a living in the various sports. They are, but the institutional mechanisms that must exist to mobilize them. So we are talking about training and mentorship programs that will coalesce seemingly these dispersed, skills that are currently just walking around ungathered, unfocused, into channels that they can begin to really gather momentum.
Yeah.
And to instigate development. So there are a lot of investment avenues, from feeding ourselves, as we've talked about, rice farming to poultry farming to, but even adding value, not just producing and selling the raw, but adding significant value before you, so that you can capture some of the benefits.
Yeah.
But those are on the real side. On the financial side, products that we can design specifically to ensure that when this diaspora capital hits, or even before it hits, there are channels in which it is seeping through the economy.
Dispersed to the right places.
Yes. And there is a very good regulatory framework that ensures that it works well. So bear in mind, many people are working in the cold. They are struggling in, 8 to 5 jobs to make this money. They have to get some benefits from it. If they know that if it's entering into this sector and this product and that product, there will be a genuine return. It will satisfy both the psychological edge of sending the money and the financial aspect of, the return on that investment.
Yeah.
So there are quite a number of products. I think the financial system hasn't been fluid enough, but we are coming gradually. There's a lot of fintech innovation that is taking place right now around the continent that is making it possible, even with some of the barriers that I've talked about in terms of the cost of sending remittance.
Yeah.
If the wave of what we call decentralized finance catch up, the last year they launched the Pan-African payments and settlement systems at the Afrexim Bank, which makes it possible now. You don't have to route your transfers to London or to New York to Togo.
you know,
can just do that transaction straight
just
away.
between us. Yeah.
So we cut all of that middlemanship role.
It's even interesting how that developed. Why a country in Africa has to send money through a country outside of Africa to then come back into Africa just doesn't make sense.
That's the way the financial system was.
Because somebody,
constructed.
exactly.
So the reconstruction has to be,
it has to happen.
create new pathways.
Yeah.
So now from the Afrexim Bank, the countries that have signed up, you don't need to route that.
Okay.
And with a lot of the fintech revolution that is coming, and we have G Wallet, which is a Ghanaian, innovation.
Okay.
Running on a blockchain makes it possible to tokenize assets. So you can take your whole poultry farm, for instance. We know the value of each chicken that is there, to the infrastructure itself, to the land.
Yeah.
And all of these can be mapped.
Okay.
And a digital signature is assigned to it.
Right.
It's simultaneously available on the rails. Anyone can sit in Bahrain, in Johannesburg, in London, and view this and see and participate in real time.
Okay.
This happens with land. Others have said our land is dead land because it doesn't have legal custody. But we say no, the land is actually dormant. Tokenization will allow you to convert it from the dormant state into an active product that can be investable. For that to happen, we have to have adequate registry, land registry, and so that you don't go and have land here and today another person is claiming ownership and multiple ownerships. So these things have to be done. And with that, proper regulations from the financial system, the Bank of Ghana, the Securities and Exchange Commission, there are so many products that Diaspora Capital will find avenue to really, have the impact that it is here to have.
So how do we convert diaspora capital, diaspora remittances, rather, into development finance? Because at the moment, most of the remittances that are sent back home are going towards consumption, as we said, and not investment. About 75% of them are going into consumption and not investment.
Yeah. So this, I think this is an area that needs a lot of study. That in itself is a huge gap for us, those who are interested in studying deeply into that. Like I said, in some of the remittances that are coming in, they are not tracked.
Okay.
And that's actually larger than what is tracked.
It's tracked.
Yeah. If I add the informal channels, Ajua traveling from London to Kibera is giving £500 to send to
exactly.
Yeah, there's no way you're gonna record this in the Central Bank of Kenya, for statistics.
I get it. Yeah.
So if we add that in Ghana, for instance, in 2024, the 6.65 billion that we receive, we are actually making around $11 billion.
Right.
I mean, the informal channels.
Informal channel.
And that is huge. That means that there are some, and we know we have quite a number of, as much as we talk about the brain drain, we always talk about the foot drain.
Okay.
A lot of the best of our athletes spend earning monies that they send back home to projects. So real estate projects. But these are unorganized. That's why we don't see them. So the first point is really to get down to understand what is actually happening on the ground, to document these in real time. And I think we'll see more patterns than we are ready to admit what remittances are actually doing. But to come back directly on what you're talking about, they can be converted more formally into development projects. For instance, let's say we have a small-scale dam that can service a rural community. And we have some of these that are already happening. Ghanaians living in New York can organize themselves
together.
There's the Pungu Telenia Association. They have contributed to provide a generator for the school or the hospital, or to just help to desilt the dam. That's one big channel. This can happen, and I think they are taking place in almost every other locality that we go. We do hear of people getting installed as it's Koswahini,
exactly,
and etc.
Yeah.
These are things that we take for granted, but they actually help to, close the loopholes. The community that doesn't have a school now has a school because a few people in the diaspora have mobilized and brought in capital.
Yeah.
So that is at the smaller scale level. But as we move to the meso and the macro level, we are looking at national level or even regional level projects. For instance, Greater Accra regional level projects that are dedicated to revamping specific sectors of the economy. Maybe here is too saturated. So we talk about other parts of the country where development really hasn't yet spread there.
Yeah.
From the central region to the northern regions where vast amounts of land are still available for, starting agro-processing businesses. This is where if we have entrepreneurs in the country that already are in this place, and they have shown that they can be trusted with some capital, then we can channel that directly into it. At the Nile Valley Multiversity, we actually have some of these projects going on because we have meta farms around which are set up simply as agroecology systems. You are not just investing in them, but you come in and you want to live outside of this city life.
Yeah.
You already are living like that in London or in New York. You want to come home, get to the ground, touch the earth, feel the chicken and turkeys and other things going around, eat naturally. That is one other. So big, large-scale agroecology systems that are self-sustaining, that can attract this diaspora capital.
Yeah.
And not just as an outsider bringing in money, but you are part owner of this enterprise.
Exactly, yes.
So within that system, you can have accommodation that you can stay for the rest of your good internet, good water and electricity facilities are there. And it doesn't really matter which part of the country it is because it's accessible.
Yes.
And these are, meso level projects that can be had. And then at the macro level, at the national level, deliberate policies that are geared towards harnessing this 25% that is coming into investment. Which investments are we talking about here? Again, it is unorganized. So investment vehicles, government projects such as, revamping the agricultural sector. Let's become food sufficient in our meat production. We want in the next 5 years not to import more than 20% of our poultry or even other needs, similar to our tomatoes. It's now a crisis for Burkina Faso saying, no, we are not sending our tomatoes like that anymore.
Yeah.
Why is it a crisis suddenly here? So those are national level projects. The farmers in Akumadan can be mobilized in a way the irrigation systems that were there could be revamped, proper community level management with oversight from the district assemblies to the top level, so that these become accountable and well-functioning local growth poles that stem the tide of the youth living the rural areas. Accra is already saturated, so is Kumasi and other areas. We have to begin to send the development outside there. And I think diaspora capital is one of the most trusted forms of capital, if and only if we can design these products.
Yes.
So these are fiscal products, but the financial products too are there. And with the fintech revolution, we are still waking up to it.
Yeah.
The regulators are almost about 20 years late. But granted, that still will come.
Yes, yeah.
So that regulatory environment should make it possible for money to flow, just like the river flows, unrestricted, not dammed in any way, but to flow to the productive, sectors and investments that are useful for growing the economy, changing the structure for once.
Yes, yes. So I think government really needs to wake up to the potential that diaspora investment remittances that are turned into investment, what that can have. But it is also creating the environment for it to be easy for private enterprises to be able to link up with diaspora capital to be used, giving the diaspora investor peace of mind, the feeling of being happy to send their money because they know it will be safe, it will be used as it said. So that sort of framework, government really, African governments really need to tap into that. Do you think, so we've had the dam that you described, which was a direct sort of use of diaspora capital. Do you think that would be a good way forward for a lot of African countries for the governments to try and directly raise money for bigger development projects?
It's the most natural way to go, because we said about the problems with going to the World Bank or the IMF for money. You are tied, and they are directing you where the money should go, how you should spend it, where. Yeah. But this, you design a product, and then you say, this is where we need capital from the diaspora to go into. And that can easily, like the Ethiopian dam. Example. So if we want to construct the road from Koforidua to Accra, for instance, that could largely be something that can be constructed from diaspora capital and tolled. Yes. Like in many places. We could have these roads that the tolling itself becomes the generating capacity of that investment to keep the road running, but also to pay for the investment. So instead of looking for foreign direct investments, some of the companies, and we have lots of Africans that are running good companies outside. They have done so well with what they have created out there. It so happens that back home, people think Africans just cannot do anything unless they are outside. And that mentality also has to change. It has to change. So specific development projects, from road construction to warehouse and to seed banks to animal feed. The last time I checked, all our poultry feed, the top 5 companies that are producing the poultry feed in this country are all foreign. So there isn't any local. So when we talk about your chicken being import dependent, it's not even just the day-old chicks that you are bringing from outside or the ones that you are importing from Brazil, China, and the US, but even the feed that you are giving to the ones that are here, it's also imported. And we are living very dangerously with that. So diaspora capital can easily target some of these big projects that are coming from the larger public policy circles and well managed. And these should be devoid of any political color. Because in the end, this is a service to Ghanaians. In fact, when that money comes as remittances, we don't assign any political color to it. It is just capital flowing to Ghana, to Africa, by Africans living outside of the continent. All they want to see is that this capital touches lives. It changes the fundamentals of our economy and it adds value.
Absolutely. Is there, I mean, if you look at it, so we go to the IMF and they give us loans, foreign investors, and they give us loans. They come with a lot of strings attached, but essentially they also come with interest. We are paying interest. It's not that they are free and that's why the strings are attached. We are still paying interest. If we go for diaspora loans in a big way to put into big development infrastructure, I mean, this will also come because they will be hoping to make some money of it. So it will also come with interest. But from what we've discussed so far, they would be devoid of these strings, strings that are choking us. But they are more dependable. So if we get it right, it will have a great impact. What I'm trying to understand, I don't know if you know, is whether the interest that we get on the IMF loans, is it a lot cheaper than if we were to sort of raise capital through Diaspora Capital. Will it be cheaper?
As it stands now, if you want to make a comparison of what we have, if you look at 2025 figures, we spent about 4.6% of our national income to service the interest on our loans.
4 points of national
Yes,
income.
the GDP.
Right.
Yes.
Okay.
Now, compared to how much we spent on capital expenditure on building our roads, and it was about 1.6. So literally, in the long term, even if they are giving you those loans at 0.00000%, the debt service, and this is servicing the interest, not even the principal.
Yeah.
And not even, we haven't talked about the conditionalities.
Yeah.
It is a must that he who goes borrowing will be told by the one who is playing the flute how to dance.
Yes, of
for that
course.
money.
Yeah.
And so for us, I think that we have to outgrow this type of development finance, no matter how short-term beneficial it has to be.
Yeah.
In fact, I have looked at the data from the 1960s up to now. In each of the times that we have gone outside looking for the money was already inside.
Oh.
Yes.
Right.
It was already here. So it's just like somebody stealing your watch and selling it back to you. You know,
exactly.
that type of thing.
Yeah.
The money was already here. It is all the things you are having here that gets sold there and generates the same income that turns back.
So the money is from us. That is used to
literally speaking.
Yeah.
So Africans have to do one thing.
Yeah.
Is to wake up.
Yes.
And see what is already here. And the diaspora plays a very key role in this. We said so many products can be designed in this way. It doesn't require any extensive financial engineering to come out with some of these products. And because it is our own money coming from us, just living in another country,
it
is more stable.
Yeah.
It's more trustworthy. And it is consistent. And so it will fund really qualitative development as opposed to superficial and fixing here and there.
Yeah.
But look at the roads that we've constructed in the past 40 or so years.
Yeah.
Look at the roads. I saw one the other time towards my house in the lakeside. In less than a year. This is back to zero.
Yeah.
So we are also not using, and by the time the money gets there, and what happens to it, nothing is really spent on the actual infrastructure.
Yeah.
And that's also the other part of these so-called development finance monies.
Yes.
Because all the contractors that are coming with the money, the materials that are coming with the money. A couple of years ago, we did a study on one of these projects financed in Kenya. The Chinese brought literally everything from cement to iron rods to glasses, even to the extent that the signs that are showing this is an exit, they are all in Chinese and they are all fitted like that. So the money that is given to you as loan ends up back there. It is just
they make sure
of the arrangement.
Yes, yeah. They make sure they extract maximum.
So
as much as they can get away with,
which
is a lot.
Yeah, it is. So,
it's like
so I mean, people haven't looked at this, but maybe they have, but they haven't thought about it very. So if you go in for $100 billion, by the time that $100 billion actually hits the ground, and by the way, these are just digital figures that get transferred. Nothing actually
happens.
It's you left with almost about 80% of it ends up where it is coming from. It is true with development aid as well. UK is giving you aid, or the Netherlands is giving you aid, and they give you MRI scanners. You don't know how to fix it. So when it breaks down, they fly this very expensive consultant, comes to stay here and fixes it at the fee that is way beyond what
it should be.
This thing was given free,
but you're still paying for it.
Yeah. And this is how the system is running.
Yeah.
I think the game is no longer hidden. Everybody knows how this thing is. It's up to us whether we'll be bold enough to start new conversations like what you have started.
Exactly, yes.
And not just conversations.
Yes, but
the
looking
action,
for ways.
that goes with it.
Yeah, absolutely. So to finish off, what kind of impact do you think it will make on the continent if some of these ideas that we've just talked about are adopted?
Yeah. Africa at this moment is at a very critical inflection point. And that inflection point is either to take off and fly as the eagle or to stay on the ground as the chicken. And I think we've already made the decision. The way we are even talking as a continent, as a country, is showing that
much better.
We are no longer ready to sit down for our lunch to be eaten the way it has been eaten.
Exactly.
So that gives people like myself a lot of optimism and hope that what we are talking about at least is getting into people's ears. Maybe it is not enough, but at least
it's a start.
It is starting some way. If you want to speak to God, they say you speak to the wind, like they are doing.
Yeah.
It will get picked up some way, somehow in the ether. And then it will hit some minds that are also connected to this. And then people begin to think and act and behave differently.
Yeah.
So I think that is the greatest hope that I have. With all that we have also, there is an awakening that is going on that will make us increasingly look deeper, think deeper, and search and begin to question the fundamentals of the economy, the politics, the religions, the society that we have run so far. And all of these will culminate in, harnessing the potential of our own, both within and without the continent.
Yeah.
And with the coming together of these two forces, Africa is unstoppable.
Yeah. So hopefully we have a big journey ahead of us, but also a lot of optimism. Yeah. So I'd like you to say to the audience and the listeners anything at all that you have to conclude.
Thank you very much for having me. I think it's been a very nice discussion that we've had, and you have started a very big platform that I see growing and becoming really the mouthpiece of what we can do with people who have lived in the soil here and elsewhere, have experienced both worlds and how to integrate those worlds. So my message to the listeners and the followers of your channel is that this is the beginning point of what is the master seed. It's just started. A great tree. In 20 years' time, we will see it blossom. And that blossoming is coming from this tiny seed that has been sown. The continent is already wide awake. There's no going back. Our ancestors gave us all the clues, and they pointed to this very pivotal moment where everything comes together, and it must happen. African resources for Africans first.
Yeah.
African ingenuity and talent for Africa. And we must wake up, both Africans within and without, to the opportunities. I mean, everywhere you go, every literature you read, they all point, this is the most exciting place to be. Yeah. The paradise, literally speaking, is this place. So all the ingredients are here. It is the place where you walk into a land that is so pristine and virgin that you can literally create as an artist on a blank canvas anything that you want to create. The population here is youthful. We are the only place where we can birth and populate and create new things. So the optimism, both for us living on the continent, for those outside, is that let's put all the resources together. Let's have a common mind. Let's work towards that common agenda. Erase the great return back to the roots.
Wow, that is profound. So thank you so much. Many, many thanks to Prof for actually coming, taking time out of such busy schedule that you always have to come and have such a very inspiring conversation today. And thank you to our cherished viewers and listeners for tuning in. Hit the subscribe button if you're not already subscribed, and do share and like to amplify our voices to create the change we need. And don't forget to grab yourself a copy of our book, The Great Return. It is on Amazon in all forms. And if you're doing or thinking of doing business or investing in Ghana or the rest of Africa, then we can help. Get in touch on tgrafrica.com. Book a consultation to discuss all forms of collaborations and partnerships, both with us and with others, and also for business and investment advice and guidance. And last but not least, to check out all the other great stuff we're doing and how you can get involved. See you in the next episode.